Welcome to another edition of the JAMM Podcast. I'm your host, Hollywood Hathaway, and we have an amazing episode today for you all. We have a financial specialist, Manning Bennett, who's going to be talking about life insurance and the term infinite banking. Guys, get your pencils, get your paper, because this is going to be a powerful, impactful episode full with so many gems that you guys are going to ask for more. So get ready to tune into a phenomenal episode of the JAMM Podcast. All right, welcome to another edition of the JAMM Podcast. I'm your host, Hollywood Hathaway, and we are here with our special guest. He's a financial services professional, Manning Bennett. Manning, welcome to the JAMM Podcast, my man.
Man, thank you so much for having me, man. I'm super excited for being here. Thank you so much for, just talking about, these different topics that we're going to jump into, just talking about things of substance and also of value, man. So I'm super excited. It's an honor to be here, man.
I appreciate it, man. And it's important because the services that you do, I think is overlooked by a lot of people. I've experienced it before, and I don't want to break what we're going to be talking about. I'm going to leave it to you because you can break it down better than I can. But before we start, Manning, just share with the audience a little bit about yourself, your background, anything you want the JAMM Podcast to know about you.
Man, again, thank you for having me. So again, as you said, I'm a financial services professional. I'm based here locally here in Savannah, Georgia, work with a local financial services firm called JAMM Financial. But we do business all around the United States, man. So I'm super excited because help families, professionals, business owners with foundational financial plannings from planning for, retirement, trying to minimize taxes as much as possible, also to protecting, your family and things like that. And I've been doing this, man, to think about it. I got in the industry back in 2017, right, fresh out of high school. Got my start with State Farm, with learning about financial products as well as things like life insurance. Also, I'm a married man of almost going on 7 years. My beautiful wife, my bride, Caitlin, and she's always a support to me in terms of marketing. Man, thank you so much. Yeah, in terms of just marketing, everything, man. So a lot of this, you see me, but it's more so a team behind me, a lot of support with this. And I'm just super excited. My passion is really just helping people, educating them on the things that they might not have known, and just also empowering them to make decisions that's also going to change their lives, and so not only protect their lives, but also grow it and maintain it to a place that they possibly didn't think about doing before.
Yeah. Hey,
that's who I am.
It sounds like you got a good system set up, man. Teamwork make the dream work. That's awesome, man.
Listen, man.
So you've been in this financial field for how long?
For about 10 years now, actually.
Okay.
This will be my 10, about 10 years. Yeah, because I got to start in 2016, 2017, the end of 2016, early 2017. So about 10 years now.
Wow. That's impressive, man. I know.
Thank you.
Not just worldwide, but just in our community, what we're going to be talking about is life insurance and infinite banking. You turned me on to this. I kind of had started some research about it prior to you and I ever meeting each other. And then when we crossed paths, it just kind of kicked off, and that's how we connected. And I wanted you to share about life insurance because it's one of those things that people tend to not think about, especially younger people. When I mean younger, that's between like these and you know what I mean? Because you think about it like that's kind of stuff you don't think about at that time. You don't think about death at that time and leaving the earth earlier than expected. But the reality of it is it happens all the time. And I've seen where people have not had life insurance and it kind of left their families into struggles and things like that. So I want you to talk about life insurance. We're going to talk about infinite banking. That's another aspect of life insurance people may or may not know about. So the first question I want to kick off with is, what is the biggest myth that you believe that people have about life insurance?
I'm going to get to that question, but I'm just over here laughing because, man, I remember the first time, one of our first conversations that we had about the infinite banking concept. This man about told me more about the infinite banking concept than myself. I'm like, man, you need to be doing what I'm doing. But to answer your question, one of the biggest myths, like you said, especially with the younger crowd, is we always think that nothing's going to happen. I'm too young. I have my whole life to think about that. And then even for some of the older ones, realistically, and honestly, man, I'm guilty of it too. People just don't slow down and have these conversations.
Yeah.
A lot of times, most times that people go looking for life insurance and things like that, especially in our community, just
Mhm.
being real, man, is when uncle done passed away and didn't have any life insurance. Now the family has to get
Yeah.
together and see how the funeral's gonna get paid for. Or have to contribute to a GoFundMe, or we have to, go to Big Mama house to, do a chicken dinner.
Yeah.
So those are the times that people think about getting life insurance, or when they diagnosed with stage 4 cancer.
Yeah.
Things like that. So what my goal is, man, is that's why I love what you're doing, is because a lot of times I don't think that people think that these things are important, because I think if you ask 90% of people if life insurance is important, most people will say yes. I think most times people don't slow down to have the conversation.
Yeah. Yeah.
So, along with not thinking that something's going to happen, I'll do it later. Oftentimes also it's too expensive. A lot of times people think that, man, I can't afford that. Or they also think that they have to get $1 million policy too.
Right.
It's like, no, there's different options. And any good financial service professional, life insurance agent is going to, or should anyways,
Mhm.
figure out what you're comfortable with, where you are, and pretty much just even grow with you, man.
Yeah.
Those are some of the common myths that I've heard. But let me ask you, man, you have an audience. What do you feel like is some of the common myths that you've heard?
Well, I think you kind of touched on a lot of them. Is one, I think a lot of people feel like, and when I see they, I include myself into that before I got knowledge on life insurance, is that it's for just preparing for your exit from the earth, funeral expenses, basically. It's for older people. That's the number one thing that I hear about. But then I started reading, I don't want to go too deep. Then I started reading a lot of wealth books. And
Yeah.
that's what changed my whole concept and my understanding about life insurance. And I was like, what? But if you look at the word life insurance, right, it's also for when you're living. People think it's just for when you die. It's also for when you're living. And I'm going to let you touch on that because, I can go in this rabbit hole about that. So I get excited.
Man, this is a conversation. Man, you're my brother. We can just go ahead. So let's go, man.
Yeah, man. All right. So next question I want to ask. Okay. I think you kind of touched on it already, but
Yeah.
is life insurance really about the death, or is it more about protecting life?
Man, that's a great question. Because most times people think that I even had, be honest with you, man, even family members that's like,
Mhm.
man, I'm not planning on dying. I don't need to have that conversation right now.
Mhm.
And it's like,
Right.
okay, that's nice, but let's kind of open our horizons a little bit.
Mhm.
Just like cell phones upgrade each year, technology and things like that. What a lot of times people don't realize is that. Well, let me ask you this: have you ever heard of living benefits life insurance?
I have not.
Okay, so
Wait. Living benefits
you're like,
life insurance.
yes.
Okay.
So, and you're part of the 80% of Americans that still don't know about living benefits life insurance. So when we talk about putting the life back into life insurance, living benefits, most people don't know is that, let's say if you have a $200,000 policy,
Mhm.
if you're diagnosed with, any critical illness, heart attack, cancer, stroke, diabetes, I mean, just off of that list alone, how many people can you think about that personally that has had any of those things?
A whole lot.
So with that, can you imagine, I'm not sure, with the living benefits, what it does is it allows them to advance a portion of that face amount while they're alive. Because think about it, when we talk about life insurance, not saying this is going to happen anytime soon, but if you were to get into an accident, and pass away, if you just have regular life insurance, right? Your family's taken care of, right?
Mhm.
Now, what if you live? You have hospital bills, you have a family to take care of. And if you don't have a policy with living benefits, what that allows for is kind of, you have this policy that's sitting there and you almost, like, hate to say it, but you're worth more dead than you are alive. Just being real. So with the living benefits, what that allows is more options if something were to happen to you while you're alive,
Okay.
to be able to, for the same, and a lot of times with living benefits, it's no extra charge.
Wow.
And it's just a matter of, a lot of times, just making sure that you're asking, whoever you're sitting with, whoever you're aging with, make sure that you're asking these questions to make sure that, hey, does my policy carry any living benefits? Because I'm pretty sure like you mentioned already, you read a whole bunch of wealth books. So if you're anything like me, I want to make sure that my money is doing multiple things. For the same, let's say $50, I can get a life insurance policy for $150,000, one that gives me more access versus one that just passes, giving me access if I pass away. I'm gonna go with option A.
Yeah.
I'm sorry, because the reality is, man, I can think of again, am I planning on passing away? Is it likely that I'm going to pass away in the next 20, 30 years? God's will. Hopefully I don't. But when I think about, and not saying that this is going to happen, I'm not claiming this or anything like that, but I know aunties that has diabetes. I have family members that has had a stroke, had a heart attack. So it's like just knowing that I have something else that's going to provide something for myself and my family gives me a peace of mind. And a lot of times it's just a matter of just knowing, because a lot of times living benefits are no additional cost or it's nothing special. It's just a matter of making sure that your policy is updated to where it has those things for you. And matter of fact, man, I just honestly, I was checking in with one of my clients on the retirement end. She didn't have her life insurance with me, but she had ended up having like a breast cancer about a year ago. And she was just telling me, man, how when she had ended up having breast cancer, what she does is she owns a beauty salon and she does hair. Mm-hmm. So when she mentioned she was only out for a couple of weeks and ended up losing clients. And, although they understood what she was going through, they couldn't wait to, get their hair done, things like that. And she was even mentioning to this day how she was still trying to recover from that financially. So I told her, I said, well, just check, give the company a call to see if you qualify for living benefits if your policy offers that. I spoke with her today because it's her birthday. She just was so excited, so grateful that I had told her that, because she said now she's able to access 25% of the face amount of her life insurance policy.
Wow.
While she's alive.
So my question is like, with that type of policy, is that more of a whole life or a term life? And then like, what for a person to dip into those living benefits, like how long is that, an immediate thing, or do they have to wait a certain amount of time frame? Like, how does it work?
Yes. Yeah, and that's a great question. So, and again, this is all subject to the company. I know the companies I work with, specifically like National Life Group, Foresters, and depending on, what company you qualify for, it can vary. But for the most part, living benefits are standard, regardless whether it's a whole life policy, term policy, index universal life insurance. It comes standard if you qualify for it with the policy with no additional cost.
Okay.
And for most part, all you have to have is the policy in place for 30 days. Matter of fact, man, we had a 24-year-old client. It wasn't my personal client. It was a colleague of mine's, but had put in, I want to say, a policy for about a little over $500,000 and made one payment. And ended up going to, the doctor because he wasn't feeling well, was having pains in his stomach, and ended up coming to find out had, I want to say, like stage 2 cancer or something like that. Man, he informed, got with the agent and informed the company, National Life Group was one of the companies, and issued this man a check of $350,000. Made one payment. And I'm not. Now, the good thing, man, is that within, I want to say, 7 months, he was cured of cancer. And luckily, his medical payments didn't come up to the full 350. So, he was pretty happy after the end because he still had a good chunk of that left that he could, although he had to go through that. And now gave him more options to where he wasn't constrained or having to worry about, okay, can I afford treatment, or, can I afford to go to this doctor? Which, I don't know if you noticed, man, but when it comes to when most people pass away from, let's say, things like cancer, a lot of times it's not necessarily the disease that they're passing away from, but it's the stress of it, having to work. So when you have money, to be able to have options, not have to worry about if your family's going to be taken care of, man, that alone gives you, another fighting chance to be able to, get through wherever you're dealing with even more. So, and that's what it's about. When you talk about legacy and talking about, to go back to your question, is life insurance just about you passing away and using it? No, man, I tell anybody, if you have a family, if you cannot afford to go 6 months without working, you need living benefits.
Manning, look, I have not heard of that, brother.
And we didn't even get into like you said, the good stuff about the different ways that you can actually use life insurance and stuff. We're still talking about the foundational stuff that anybody should have a part of their portfolio. And the reason I say that too, because you want to, like, retirement, for example, I have some clients that have like 300, 400K in their retirement. If they couldn't work, because they had to, especially as when you get into the retirement age, a lot of times, if anything's going to affect their retirement in a negative way, outside of the economy, it's unexpected illnesses.
Right.
So if you don't, again, your life insurance policy doesn't offer you living benefits, and man, no telling, with these, can you hear me, Phil?
Manning, I think you froze up.
Okay, can you hear me?
You back?
Yes, I'm back. Yeah, can you hear me?
Okay. Yeah. Okay, I think you froze up on me for a second. Dang, you was full. All right, go ahead and finish
Yeah.
what you were
Yeah.
saying.
So I was just saying, so, that's really just the foundation of the living benefits. And
Uh-huh.
it just gives you more access when it comes to the living benefits, gives you a peace of mind. And in terms of retirement, like I said, those unexpected illnesses are the things that will interrupt the retirement. Because think about it, if you have to take off of work or you need to afford to be able to get a certain medical treatment, the first thing you
Yeah.
kind of dipping into is that retirement account. And then when I ask
Yeah.
most people, what is your, 401k for? What is that Roth IRA really for? And they say it's for retirement, but end up using it for things like, unexpected illnesses, unexpected expenses, and which
Mhm.
ultimately causing them to end up working longer. So
Yeah.
it's different ways when you talk about life insurance that you have to look at it and what it actually does and the goal of it. So
Yeah. Man, I need to circle back around, bro. You blew my mind with the story about the brother who had stage 2 cancer. So let me make sure I heard this right. He made one payment
Mhm.
on a, what do you say, $500,000 policy?
term policy.
Term
Yep.
policy. And he got $350,000 of that.
Yes.
Dang. And he didn't have to pay that back.
He made
or
one
nothing?
payment. Nope. It just comes because, of course, he's advancing his life insurance policy. So I think what they do is deduct, like, instead of charging the full 500,000 in monthly payments, they'll just deduct him for the remaining in it. And I think that's what he'll pay at, on a monthly basis as his new life insurance term. So of course he's still advancing that policy while he's alive. But again, you want to have, when you're talking about life insurance, it's more than just, oh, let me get a life insurance policy. So that you're looking at it from a full perspective of, if anything would happen to me, making sure that I have enough life insurance and the right life insurance to not only cover my family, but my portfolio.
Yeah.
So again, you have, as you talk about a lot of the wealth books, a lot of wealthy individuals see life insurance as a tool.
Yeah.
So a lot of times as you acquire more assets, a lot of times you also want to acquire more insurance.
Mhm.
So because you have more things to protect, you have more things that you're jeopardizing. So it's
Yeah.
like, you really want to look at it as a tool, not just this is something that's going to pay out when it passes away, but you want to make sure that you're not. I mean, man, we can even go into things like taxes. Like, people don't realize that life insurance is one of the few things that does not go through probate. So when we're talking
I heard
about
that. I read about that in this book called Tax-Free Wealth. I want to say the guy, he was a student of Robert Kiyosaki, if I'm not mistaken. He was a student of Robert Kiyosaki.
Robert Kiyosaki is the man.
Yeah, and then Robert Kiyosaki has this book called Where Did My Money Go? I think it's the name of it.
Yes.
It's over in my book. But they were talking about that, like, life insurance can't be taxed, I guess.
It's tax-free. And what do you mean? Why that's important is because most people, fortunately, don't or to have the conversation of wealth transfer, which leaves you liable for paying taxes that, if you had the right conversations or move your money in the right places, you could pay less in taxes. So, for example, without going too deep, man, let's say that you have a old retirement account, right?
Mm-hmm.
If you have a old retirement account that this is specifically for, your son when you pass away, you don't need it. The business is doing well, that's paying for itself. This is specifically for your son. If you keep it in that retirement account, when he goes to, and again, this is, there's different limits and things like that, and it's liable to change. So don't quote me on a specific number, but there's things like required minimum distributions, which means that the government, as a beneficiary of that retirement account, you have to take this money within a specified period, which means if, let's say, you're already at one tax bracket, that all of a sudden income that you're now forced to take raises your tax bracket, which means that's more taxes that you have to pay simply because it's in a retirement account versus maybe rolling that over into something else that gives you more flexibility and less tax implications. So when we talk about life insurance, like I said, not to get too deep into it, but it's really a tool to be able to help you just keep more of your money and put it in ways that's really going to help sustain and grow your family, man. So, man, it's so many different things that you can do with it, man. And so
if I wanted to get a policy, say for instance, I have a child. If I want to get a policy for my child, like, they have to be over 18 or no?
No, man, I set up, policies all the times. I have a lot of parents that's like, hey, I want to definitely have protection in place for my child, but I also want to, have some money that they can be able to pull from, when they're ready to go off to school or, start a business. So, actually one of the policies that we set up are specifically, designed for, to act as, a college savings plan or a savings plan for your child,
Yeah.
And it's structured in life insurance. Traditionally, I know a lot of people are familiar with, you probably know 529 plan.
Yeah, 529.
So with the 529 plan, what that allows for, is specifically for education. And it's, great in its purpose and things like that. Versus, let's say, if you were to look at, structuring it, that money into a life insurance policy. Number one, it comes with the living benefits, so your children are protected, along the way. God forbid, if anything were to happen, you have that money, that you can pull from for your children. Mm-hmm. Outside of that, it gives them more flexibility. What I mean by that? We
will return to this amazing episode, but first, a small commercial break from the world's greatest dog waste carrier, Fido Bags.
Fido Bag is the only reusable dog waste carrier with a 360-degree rotation for smell reduction. You don't want to smell that shit. Here's how the Fido Bag works. You pick up your shit, put it in the Fido Bag, and you dump it off at the nearest receptacle. Easy. It comes with multiple accessory pockets, so you can store items such as dog treats, waste bags, keys, wallets, and even your cell phone. You can even use it as a water bowl. Cleaning is easy. Just spray, wipe, and air dry. Don't take no shit. Click the link below and get a Fido Bag today.
Now back to the show.
Benefits, so your children are protected, along the way. God forbid, if anything were to happen, you have that money, that you can pull from for your children. Mm-hmm. Outside of that, it gives them more flexibility. What I mean by that? They don't necessarily have to use that money for college. If they want to start a business, especially now, today's time, a lot of people are, Gen X and all Gen Z or whatever, they're entrepreneurs. So it gives them just the ability to have more options when they're older, but also things like compounding interest. So, and also if you're like a lot of Americans to where you want to also be able to take advantage of a lot of the government resources like, student loans and things like that. With a 529 plan, that's seen as additional income, which a lot of times lessens your chances of being able to apply for a lot of the resources that are available, because they're looking at it as you have all this money in your 529 plan specifically for education, mm-hmm. versus you just have that money sitting in a life insurance policy. That's just life insurance policy. Yeah. So that's not seen as additional income. So again, man.
Go ahead.
No, I was just going to say it's about matter just where you structure it.
Okay. So a 520, a life insurance plan like a 529 plan is better than the actual 529 plan because it's not seen, the life insurance policy is not seen as income versus just a regular 529.
Yes, and I don't necessarily like saying it's better, because, it serves its purpose. Right. What I would say is a lot of times it's just smarter, if, because with this 529 plan, like you said, the traditional ones that you set up, it's seen as additional income. So a lot of times that's when you're going to fill out for things like FAFSA and things like that. Those are one of the main questions that they're asking. Do you have a 529 plan? So, when they look at that, they're looking at, this student has, 529 plan versus the other student that may not have that. So who they're going to give more money to? Right. So,
right. Okay.
So, things like that is just kind of important.
So let me ask you this. Like, if I've never set up a life insurance policy, right? What would be a good, if you had to give some recommendation, what would be a good starting point in regards to policy size, the amount is what I mean, in regards to how much should a person get on their life insurance policy? Like what dictates that?
Yeah, man, that's a really, really great question, because a lot of the times when people are interested in getting a policy, most times you ask them, they're like, well, I don't know how much coverage I need, or they just hopefully just think that $1 million is the magic number. But what I would say is the first thing I typically do when I'm sitting down with a client and they're interested in getting a policy, the number one thing I want to know is what are their goals? Where I want to get an understanding of what do they currently have in place. I'm learning about, of course, their age, also learning a matter of about their assets. And that's a big thing too, because I want to make sure, how much money, how you have left on your mortgage. Because God forbid, if let's say as a husband, you're the primary breadwinner and the life insurance policy isn't enough to cover that mortgage. And your wife doesn't make nearly as much money, or your husband doesn't make nearly as much money as the person that passed away. And now you're jeopardizing losing that home. So, or even, like said, if you were that breadwinner didn't have the ability to work because of an unexpected illness or something like that, it affects their ability to be able to make those mortgage payments. So I'm asking about things like your assets. I'm asking also about, of course, your health. We want to make sure that we're fitting you with companies that you can actually qualify for, because that's a big thing too. A lot of times people think that you can just get a policy. No, you have to qualify for a lot of these policies. And that's why I always urge young people, get these policies now while you're young, while it's inexpensive. So those are some of the questions that I typically ask. Is you want to get an idea of actually how much coverage you need, how much of your income would be affected if you couldn't work or if you were to pass away. Yeah. So, these are questions that you want to ask yourself in terms of, also, I'm learning, like I said, if you have dependents in the family to protect. So, and also just seeing how much of an income would your spouse or your loved ones need to replace you not being there.
Yeah. So basically, you build that policy off of, like you say, income, expenses, if you have dependents and things like that. That's how you determine the size of your policy.
Yes.
Okay.
That's 100% correct.
Yeah.
And a lot of times, to be honest with you, it may be a thing to where we might be setting up multiple policies, depending on, if you're a business owner, you have multiple assets, or you might just have like more affordable term policy that does not have any cash value, but because it doesn't build any cash value, you're getting more coverage. For the purposes of that is like something like the living benefits. Yeah, you don't plan on passing away in the next 15, 20 years, but the likelihood of you might having, unfortunately a heart attack or anything like that, you may want more coverage to be able to protect, more of your assets versus having something that just builds, permanently and build cash value. So that's why, again, it's a matter of really learning, what are your goals? So what's your budget as well? And that's a big thing, because you don't want to put yourself in a position to where you have to worry about that. What I see with a lot of people is that they get policies that they cannot afford. Mm-hmm. And my thing is, I'd rather you have a little bit of coverage that you can afford, than risking, having a policy that you can't afford and then it, lapsing or something like that, and you end up not having coverage.
Right.
So just making sure that, these things actually make sense, and it's not just something that somebody's given to you just because, definitely you want it because you need it, but also you want an understanding to make sure that this policy is positioning you and your family in the best position.
So you touched on something in regards to like health-wise, like getting it while you're still healthy versus when you're not healthy. So just my assumption, tell me if I'm wrong or not, the more healthier you are, probably the more coverage amount you can get that you could qualify for versus a person that's unhealthy.
Yes, you are correct in that thinking. Definitely, of course, if you have certain medical condition and things like that, it could disqualify you, or you might just have to look at alternative routes, which, I'm fortunate enough to work with. You have very good relationships with a lot of different carriers. So, but what it does is when the healthier you are, the more options you definitely have. And what I mean by that is, let's say, for example, you're paying into a policy that has cash value. The healthier you are, the insurance company has different ratings based upon your health. The healthier you are, the less that you're paying for the actual life insurance portion, which means that's more money that's being placed and invested with the insurance company.
Now, is there a limit on definitely the amount of policies a person can have at one time?
Well, typically, I know it really varies on the company. And I don't know the specifics of it, but I know typically they don't want you to have, I want to say maybe more than like 20 times more than like your income. So they base it how much coverage you can have based off of how much coverage you already have and how much money that you're making. Like, for example, if you only make, $12,000 a year, a lot of times a life insurance company may come back and say, well, why do they need a $3 million policy? Because the purpose a lot of times also for life insurance is to replace the income you would make if you were here. But most times you honestly don't see that, to where people, get too much coverage, because you really have to get a lot more coverage than, your salary or your income for them to, even kind of flag it or start asking questions about it.
Yeah. Man, you dropped a lot of nuggets right there, Manny. I'm sitting here writing notes as you was talking, like page
Thank
4.
you.
I'm gonna spin off, okay, because I want to talk about something that I hear a lot, and I want you to touch on it because I know we've had this conversation before, and I mean, you know how I am about it, but this term called infinite banking. I hear it a lot. For those of you who are listening, you may or may not heard of it, but I encourage you, if you haven't, do some research on it. And man, I kind of want you to kind of just basic terms explain exactly what infinite banking is.
Man, you getting me excited. I get really excited talking about this topic only because most people, especially, just a lot of people just look at life insurance as just a tool when you pass away. But when we're talking about actually strategy, number one, the term infinite banking is a concept. It was a concept that was created by or not necessarily even created, but that was acknowledged by a man named Nelson Nash. And all he did was he viewed how these financial institutions and a bank actually use life insurance themselves as assets. And most people don't think about that.
Living,
Like
talk about it.
Most people don't think, like a lot of times, man, these life insurance companies, they got money.
Yeah.
And what I mean by that is when I think a couple of years ago, the banks started to crash and things like that. Most people don't realize that when you put your money in banks, they are only insured. It'll tell you, even on your debit card, it says FDIC, this money is only insured up to $250,000. So if you got $250,000 and $1, that $1 ain't insured. In the bank crash, they are not liable to give you that money outside of the initial 250,000. So when we're talking about, infinite banking and just that concept, a lot of times what it is giving yourself the ability to become your own bank. And so you might say, well, how do you do that? So what pretty much in plain terms, what this is, typically, putting money into a life insurance policy over, of course, a couple of years, building it up. And what it does is, the highlight of the infinite banking concept is having the ability to be able to borrow from yourself. So what I mean by that is, let's say, and this is where, you get people that, I have some clients that pay up to, $1,000, $2,000 a month on, in life insurance premiums, because they understand the impact and the ability that this gives them. So let's say, for example, you wanted to purchase, I know for your food business, you have, a trailer. Let's say your goal in the next 5 to 7 years is to expand. Now, let's say if you wanted to put a down payment, on another trailer and a down payment costs $10,000. So let me ask you this. If you were to put that money into your own bank account, the $10,000, and pay that down payment, what happens to that $10,000 after you pay the down payment?
That's it. It's gone.
It's gone, right?
Yeah, it's gone.
So with the infinite banking, when you have the money structured into a life insurance policy, what that gives you the ability is you're using that life insurance policy. Let's say that you have $1,000 in the life insurance policy after you built it over a couple of years. What you do is you're using this life insurance policy. You're saying to the company, hey, I have $20,000 in my life insurance policy and accumulated value. I want to use it as collateral to be able to pull a loan. So what you're doing is you're putting yourself in a position to where when you're making, larger purchases or maybe purchases for investments and things like that, you're giving yourself the ability to put your money in a place to where it never stops growing. As long as you're making those, those premium payments, you can pull a loan from it versus, like you said, where if you have it in your bank account, once you pull that $10,000 out, it's gone. If you have it in a life insurance policy, that $10,000 is still in that policy, although you pulled a loan from the insurance company.
Hold up.
Because you're using that policy as collateral.
Hold on. Let me make sure I heard this right.
And it's still growing. Okay, go ahead.
Yeah, I'll make sure I heard this right. So I have a life insurance policy, right? Just saying, if I have a life insurance policy, and it, like you said, it's done grown in $10,000 the past 3 years. If I needed to get a loan, example, for $5,000, I take $5,000 out of that 10. The interest is still going to grow on the policy as if I still have $10,000 in there, even though I've taken out 5.
That's correct.
What?
That's correct. That's correct. And what it's called is participating loans. And why this is important is because a lot of times it's important to save. Don't get me wrong, but you don't always want to be starting from zero. You make a, purchase. Now you done took, saved a long time. You were disciplined, and now you're back at zero again. So this gives you the ability to, and a lot of times, a lot of people, that business owners, a lot of investors like to utilize this as a strategy. It's like, because they understand that, man, why use my money if I can leverage the insurance money and continue to have this money still growing, gain the interest of 10,000, although I'm pulling a loan of 5,000.
That's smart.
So, and it's really smart, because it also affords you the ability to take more risk. Because guess what, man? If, let's say, you're planning on using it for a property that you want to purchase, an investment property. Let's say everything goes bad with that property. Man, you're not forced to pay this loan back at no specific time. You don't have, you're not jeopardizing your credit, because we all know how business go up and down.
Right.
So it's like, it's just, you're being smart about the risk that you're taking, and you're minimizing the risk that you're taking simply because of where you place your money.
So, so if I took out a loan, just saying, if I use that same example I just gave you a few seconds ago, if I took that loan out, what's typically the average time frame you have to pay that loan back?
Man, it's on your time frame. You create the terms, and that's a big thing about the infinite banking concept, is that it gives you access and it gives you control.
Damn.
So you tell them when you're going to pay them back, and of course you want to pay it back because of course that gives you more borrowing power. The quicker you pay it back, the more you can borrow from. But let's say, for example, you're taking your time, you didn't pay it back in 2 years. Let's say you didn't pay the loan back in 2 years. And you're still making, contributing the regular monthly payments, or however your payment method is set up. That money is still, again, growing as if you never touched it. Over time, as it's getting into interest crediting and things like that, you have more options to pull even more money later on.
Wow.
So it really just opens up a lot. And of course, like I say, the goal is to pay the loan back. But if you don't pay it back, man, it'll just come out the death benefit when you pass away.
This is crazy. And that's what I read. And that's what just kind of gave my mind a whole twist when I was reading about this infinite banking. I was listening, and like I said, you and I had the conversation about this. It almost sounds too good to be true, but the books that I've read and all the names that they mentioned, some of these famous family wealthy names out there, this is what they've used over time. And I even know some coaches now that they don't put their monies into 401ks, they put it into life insurance policies, for the same reason that you just mentioned. And it just kind of opened my mind up to a whole new different avenue regarding like investing, and if it's worth putting for, because think about it, with a 401k, you got to wait to what, 60, 65 before you can even touch it. I mean,
59 and a half. 59
and a half. What if you don't live to 59 and a half? And what if you need it like right now, right?
Man, you touched on a lot of stuff. You said, one thing that I want to talk about is you said, well, man, it seems too good to be true.
Right.
You want to know why it seems too good to be true? Because most people don't have the discipline to actually, they think, a lot of times most people think this is a, get rich overnight thing, or, once I do this, this is the end all be all. But it's like anything else, you have to, put into it, you have to, get started. So it's like, it sounds too good to be true, but the real test is actually being able to do this for yourselves. Like you said, we have, like you said, from the Rothschilds down to the owners of Disney, the creators of originally of Disney World. A lot of wealthy families have been using this for years. This is nothing that's new. I think they've been doing this way back, and definitely early 1900s has been using this concept. So, and then you also talked about the 401k versus a life insurance policy, the infinite banking system. So the reason, and again, a lot of times it don't even necessarily have to be one or the other. But when we're talking about, like you said, the ability that this gives you, okay, I'll tell you a story. So I had a client worked at a hospital here in Georgia, the Vidalia Hospital, for almost 30 years, old lady. And it's 2019. She's ready to retire. She goes to look at her 401k. She was doing what she was supposed to do. Put the money in, and thought she would be okay. Man, she said when she went to go look at her 401k account, she said she felt like half of her money was gone.
Yeah.
Now, was half her money really gone? I think she was exaggerating a little bit, but I mean, that much money missing might as well be. I'm saying, especially if you had plans to retire.
Yeah.
So for her, that changed And it was because of how the economy was doing at the time. She was ready to retire, and she didn't have time for the market to catch up. She was ready to retire. So what she ended up having to do was go work at a daycare in her meantime, just to be able to also survive in retirement. But she was doing that part-time. And luckily, you know, she did enjoy the children, everything like that. But what people don't consider is when you're building out your, you know, retirement portfolio, your retirement portfolio, just your financial portfolio, there's the things that you want to consider as what risk are you taking in the market. So a lot of times with a properly structured, like, you know, infinite banking concept life insurance policy, a lot of these policies are what we call indexed. Now, what that means is it means that you're gaining up to a certain interest rate, but at the same time, what you're doing is taking away the risk. So as the market is going up, you know, you're capturing all that gain up to a certain percentage, but when the market is going down, that money just locks into place. So back in, like, let's say, you know, 2008, when the economy crashed, people were jumping out of windows, committing suicide because of how bad the economy was. If anybody that had their money into a policy that was indexed, their money just stayed where it was at until the economy reset and went back up. And why that's important is because as you're, you know, nearing towards retirement, you can't afford to take risks like that. That's going to jeopardize, you know, even I'll say even a third of your retirement nowadays. So it's a matter of, like you said, one, making sure that understanding that with the infinite banking concept, it mitigates the risk, but also, like you said, in terms of the 401k, taxes as well. And I would say, unless, you know, you have an employer that's contributing a certain percentage, you know, you just want to be smart about, you know, where you're saving your money and a tax implication, because think about it, you know, yes, it's pre-tax, but you instead of paying on the seed, you know, paying taxes on a seed, you're now paying taxes on a harvest. So you done spent 20, 25 years paying into this account that now has $300,000, you know, $400,000, $500,000 in it. And Uncle Sam's looking like, oh yeah, this is the moment we've been waiting for. So it's like, you know, you want to be smart about that.
So, and just to recap, so like you said, if the economy happens to crash, the investments in which I made into my life insurance, my infinite banking, it will not be affected by the economy. Wow.
That's correct. % correct.
Wow.
And that's good to have. And I'll tell anybody, you want to have something in your portfolio that you can, you know, that you can project. You don't want to be, you know, you don't want to always have to guess, you know, if this account is going to do well based upon the market or, you know, based upon, you know, taxes that year. And again, I'm not saying, you know, 401ks are bad, anything like that, because they all have its proper place. It's just good to make sure that you're, you know, you're having these conversations to make sure that your portfolio is diversified enough to actually in a way that meets, you know, maybe your risk tolerance.
Wow. That's amazing, man. That is amazing. And so like that, I guess it's a personal question. Like, to get the returns to do the infinite banking concept, like, do I need to put in thousands of dollars to see that actually have some significant growth, or how does that work?
Man, that's actually a great question. Man, I would even say the good thing about the infinite banking concept is that you really can put in, you know, it allows us flexible enough to where you can put in whatever is comfortable to you. The good thing is about it is that I can sit down, you know, most professionals can sit down with you and illustrate what's comfortable for you, depending on like the growth and things like that. Depending on that, you know, we have some people that want to do more or that's comfortable where it's at. So a lot of times it's really based upon how you made, again, because I have some people to where I sit down and I show the numbers. I'm like, over 20 years, if you were to put this much into it, this is what the projections are looking like, you know, in terms of accumulated value. And they're like, listen, man, I need to put some more into it. But then also allows, so, you know, again, I do have clients that pay thousands of dollars, but then I also have clients that pay $80 a month. And what that does, of course, the more, you know, funds that you're putting into it, the more it grows, but it's still allowing some growth. That's still better than leaving your money into a bank account and it's gaining 0.02 of interest each year.
I was listening to, sorry to cut you off. It's crazy because, like,
oh, you're fine.
I have this, and that only came through just, I don't like banks. I know we have to use them necessarily because, especially if you work a job, that's how they deposit them. But when I heard how much the banks make each year off of, what was it? Number one, they make billions of dollars off of overdraft fees. and then to keep your money in. If you don't have, if what was it, $20,000? I think is what he said. If you don't keep $20,000 in a bank, then it's just like they get like this interest off of your money by keeping it in there.
Uh-huh.
So I was like, man, that's like a ripoff. Like they fund your money out to somebody else without your permission. Well, I guess they do have your permission because you signed their clauses. But the crazy part is they charge people if they overdraft or something. That's nuts. That's billions of dollars off of overdrafts alone. And I was like, man, banks are
And
like, that's worse than taxes, I feel like.
man, like I said, with banks it's just funny because, like you said, they charge us, the overdraft fees, but when they get in mess, they need the government to bail them out.
Yeah, that's crazy, man.
So
That's crazy. I guess, and then another question is like, okay, I know like for IRAs, there's like an annual limit you can put into those accounts. So like with a life insurance policy and a pretty much like you said, the infinite banking policy, is there an annual limit? Is there a max that a person could put in annually?
No, and that's a the key feature that a lot of, like I said, especially when I talk about a lot of business owners and things like that, they love that. Like I said, versus the IRA, Roth IRA, those are really, really good.
Yeah.
But like you said, I encourage a lot of my younger clients like myself, get those while you can qualify for it, because once you start making over a certain income, you no longer qualify for the Roth IRA. But then, like you said, you can only put up to, I think, like $6,500 per year, into a Roth IRA, if I'm not mistaken.
Yeah.
Versus something like this to where you can put into, for the most part, however much you want to put into it. So it does allow a lot of flexibility in that regards. That's why I like it. In terms of the building, growing tax deferred and also having the tax-free death benefit as well.
Yeah. Okay, man, you dropping some gems. I hope y'all been taking notes because I've got a lot of notes right here. Jeez. Okay, question. So everything you mentioned, I'm on cloud 10 right now. But what are some of the biggest mistakes that you see people make when they're setting up like an infinite banking account?
That's a really good question because I always tell people, you go online right now and you talk about the infinite banking concept, you're going to get mixed opinions about it.
Yeah.
And the reason being is because you want to make sure that it's properly set up. So when we're talking about in terms of the infinite banking concept, we're making sure that our clients are getting the minimum death benefit, which means less insurance premium, and they're getting a maximum cash value. So that's meaning more money that's actually growing into that account. So it is important that when you're talking about the infinite banking concept, that you're actually sitting with a professional that knows how to structure it. Because honestly, like any profession, man, honest agents, you can structure it to a way where it's in their favor, to where they get more of a commission, man. And then you turn around a couple of years, you're like, wait, this is not what I signed up for. So you want to, of course, like anything else, make sure that that person is ethical, and also setting it up to where you're paying the least amount of premium for the life insurance, and more of that money is going to the cash value.
Yeah.
So that's the biggest thing, is making sure that it's properly structured to where it's actually growing. Because again, the good thing about the infinite bank concept is you can structure it however you want, or customize it rather to however it fits your needs. But at the same time, you want to make sure that it's actually meeting your needs. And a lot of times that can be done with you're sitting down with a professional, for the most part, that is familiar with setting up these type of plans.
So when they sit down with their professional, what are some questions for a person that's never set up a life insurance policy? Like what would be some of the basic questions you think they should ask that professional when they're trying to set up a policy?
Yeah, I would mostly say is, how is this policy structured?
Yeah.
That's the main question that you want to ask. You want to make sure that if you're specifically talking in terms of the infinite banking concept, you want to make sure that that policy is getting minimum death benefit, which means that for, let's say that you're putting $200 in, you're not paying the most for $200. You're not paying the full $200 for the amount, for the most amount of coverage that you can get. So okay, let me actually break this down a little bit. Say, for example, with the infinite banking concept, let's say if you're putting in $200, let's say at max, $200 can get you, let's say, $500,000 of coverage. So how you structured it, you can get the full amount up to that, let's say, the $250,000 of coverage, or you can structure it to where I want to get the least amount of life insurance and I want more of this to go to the death benefit. So instead of, with that same $200 paying for $250 of coverage, you might only be paying for, let's say, $50,000, which reduces that cost of insurance. So that's more that's actually, compounding and growing. So those are the questions that make sure it's structured to where you're paying the least amount for life insurance and more of that is being grown into the cash value. That's the biggest thing. Aside from that, a lot of individuals, again, you can structure it however you want to structure it. Some people like to go more aggressive for, let's say, the next 7 years while they're working, money is coming in. And then they just want to stop paying into it after 7 years and just start pulling it as like a supplemental income. So you want to make sure that you have an understanding of how it's structured, how long you'll be paying into it, how much you'll be paying into it. And also, you want to look at the projections too. For most companies, they can actually do an illustration of showing you, based upon your age, where you are, how much you're planning on putting into it. And let's say 10, 20 years, what that would actually look like if you were consistent in those premiums. So you just want to make sure that you're sitting down with somebody that's going to be honest and open about you. And most of all, answer your questions, man. So those are some of the questions that I would recommend.
I love that. That's good, brother. That's good. That is good. Man, Manning, you have dropped so many nuggets on me today. And I'm pretty sure the audience is appreciative as well, too. I know they got a lot of questions. One more question before we shut it down. Do you want to touch on how infinite banking, because you hear this other term, generational wealth, right? How does infinite banking tie into generational wealth?
Oh, man. Well, I mean, that's such a thick question because life insurance alone, that opens up doors. It opens up opportunities. Personally, I'll be honest with you. When my mother passed away, by the time I got into this, unfortunately, her health conditions didn't allow her to qualify for a lot of the policies and plans. So I know what it's like to have to grieve and have to work, then still go back to work to make sure I can, take care of my family and make sure I still can provide and put food on my table. So that alone, for me, when you're talking about creating legacy and just the ability that life insurance give, number one, it gives you a peace of mind, for your loved ones and things like that. So, in terms of legacy and generational wealth, man, a lot of times properly structured, I'm going to be honest, properly structured infinite banking concepts and just life insurance in general go hand in hand with things like trust and wills at the same time. Because it's nice to be able to leave your family money and things like that and your loved ones, but you also want to make sure that they understand how to make sure that money can actually last.
Yeah.
So a lot of times with wills and trust, that allows you, and again, I'm not the specialist on that, but it goes hand in hand when you're putting these things together because it allows you to put stipulations to make sure that that money is actually being intended and used in the way that you had planned for it to be used.
Yeah. So
when you're talking about generational wealth, that can be what this life insurance policy can look like is opportunities in education, opportunities and travel. I remember growing up, man, and again, I'll be the first one to tell you, I didn't grow up, I didn't, we didn't struggle like that, but I wasn't as fortunate as maybe some of my peers to where I remember being in high school, man, I was in chorus and I had the opportunity of going to Europe for like for the entire summer for like four weeks. But it was like $7,000 and this was back in I think like 2013. So it's just like a lot of my other peers had the opportunity of going, but it's like if you have something like this set aside that's intentional for your children, your grandchildren, this gives them access to just open up their imaginations of what they could do, what they could be, and just even allow them to be more of themselves. So, and when they're more of themselves, they're making a better impact on the community, making our communities better, and overall making us all better. So, yes, it's creating, money and finances, but to me, it's really about giving access to generations to come to where they don't have to choose between necessarily going to this school or that school because money is an issue. Actually being able to have the choice because grandpa was intentional about making sure that I set this up for the family. So things like that, man. And I can get on a whole tangent about it because I'm just so passionate because like you said, the infinite banking concept is great alone by itself, but just like you said, just having that life insurance in place, what it does for families in general, man. I mean, you hear stories of, I always laugh at this one. They said there's some men that wives may not have had life insurance on their husband. And next thing, within a year or two, they're married again because they just trying to survive. So it's like
Yeah.
things like that, life insurance definitely frees up a lot of issues and stuff like that. So I said my wife will be a part of that number, man.
Right. No way. No. They say good man leave treasures for his children's children. That's 2 generations.
Man,
Bro,
talking biblical, man. Don't even go there.
You know what I'm saying? Like, it's crazy.
That's it. Seriously.
You dropped some serious knowledge on us tonight, Manning. And man, I want to have you back on at some point. We may even do like a live audience to where we have people they want to log on and ask you questions and things like that. If you're up for it, I think this is going to be a episode where people get a lot of knowledge and awareness on stuff that they probably not even heard about before. I know some of the things that you mentioned tonight I've never heard of, and there's things I have heard of, and you gave me even more knowledge about it. So I appreciate you, Manning, coming on. Any last words that you would like to leave for our audience before we shut it down?
Yeah, man. Like you said, there's a lot that we cover. If you don't get anything else from this, just listening today, what I want you to do is just be empowered to have the conversation. If you don't do anything else, if somebody that is a financial professional, a life insurance agent, sit down with them. And if you don't know one, you can get in contact with Dewan. He'll give you my information. I'll have no problem with that. But I want to empower you to have the conversation, because one conversation could change the trajectory of your financial scope for your entire family and generations to come. Like I said, we touched on a lot of things, and what I want you to get from it is that there's different ways that life insurance can, be used, and it's been used for years and years and years. And I want us as just, everyday people to start taking advantage of a lot of these things that the 1%, the wealthy have known about for years, to really give us a position, not only give us a position, but give us control, give us access, and give us flexibility. You don't have to be locked into a retirement account for 30, 40 years. There's life insurance that does more than just paying out when you pass away. There's ways that you can save on taxes, defer taxes, which overall means that's more money that can be going to maybe something you love, whether it's your business, your family, just a special cause, your church, man. Even things like and I didn't even touch on it, but a lot of times these insurance companies will even give 10% of whatever your face amount is to a 501c3 of your choice with no additional charge. So just having the conversation, man, I empower you to have that conversation. So man, outside of that, man,
I think I lost you for a second. You said the company would give a percentage to your 501c.
Yes. So most insurance companies will, let's say if you have a $500,000 life insurance policy, they'll give an additional, they'll give a 10% of that face amount to a charitable, organization or nonprofit 501c3, which a lot of times, again, who wouldn't want to be able to leave something in their name that didn't cost them anything extra simply because they listed their church or their favorite nonprofit or organization on their life insurance policy? So, like I said, the goal of it is just to know that, have a conversation. It definitely can be used in multiple ways, definitely to make sure that you're protected and you're also maintaining and growing your generational wealth. And also, Dewan, I want to thank you again for just having me on, man. It's been truly a pleasure. This is something that I'm very passionate about. Man, anytime you want, man, definitely hit me up. I would love to be on here. These are topics, like I said, I think more people should know about it, because again, I'm not no gatekeeper. I think the more we all know, the better we all do as a community, man. Yeah. And I love what you're doing in this community. And if there's anything I can continue to do to support you, man, just always let me know. I'm here.
I appreciate it, Manning. I do want to have a live audience to anyone that's listening, and I'll plan that and put that out and have you back on again, man. This was good. I still got about 10 or 15 more questions that I wanted to ask, but I'm looking at the time and I'm running short. Real quick, how can people get in touch with you, man? Email address, whatever you want to give out, how people can get in touch with you.
Yeah, man. Again, thank you. You can reach out to me on social media. I'm Manning Bennett on Instagram, Manning Bennett _ Manning Bennett on Facebook. Also, you can email me, Manning@jaja, JAJA, financialgroup.com with any questions or concerns, or if just like I said, you want somebody to review your portfolio and just make some recommendations, I would definitely love to. And again, Thank you so much for having me, man. It's truly been a pleasure, and I'm super excited.
For sure. Guys, we hope you got a lot of nuggets from today's episode. Like I said, Manny, we're going to have you back on, man. Thank you for coming on, and our audience is super grateful for having you on as well, too. You all, hit up Manning, play, repeat, and share this episode. Find us on social media. We're going to put Manning's information in the show notes below. Like my motto always goes, stay fit, fix your finances, keep the faith. Until next time, y'all keep jamming out on the JAMM Podcast. Have a good night.